Welcome to the Solar Shield financial exercise and the Solar Shield case analysis. I work hard to try to keep the videos relatively short, 10 minutes or less, so that you can watch them in bite-sized chunks. I'm not going to do that in this one. This one could easily end up being 20 to 30 minutes because I'm going to have to walk you through the spreadsheet. Normally, when I teach this class face-to-face, we do this exercise face-to-face, and that's why I'm going to walk you through it. So I would recommend as you watch the video, you have both the spreadsheet downloaded, and I'm making it easy for you because I'm going to provide you the completed spreadsheet. And I also recommend you have the Solar Shield Finance exercise background information for the background information for the case analysis available to you to make this make sense. So like I said, normally I do this in class and then we do the case analysis in an online format. I'm going to give it to you all at once. This is the set of spreadsheet, the spreadsheet program that are textbook references from two wonderful guys at the University of Colorado, Frank Moyes and Stephen Lawrence. You can pay a lot of money to get a similar product in Excel for what you've now got access to free. What I'm going to do is I'm going to walk you through the bottoms of the tabs, and you're going to see that the background information for the financing exercise just goes step by step through these tabs. Next is the instruction tab. The thing I want you to realize that's most important is what is green is what you mess with. The other shaded colors indicate that they are linked to other parts of the spreadsheet and you fiddle with them at your own peril. The next tab is comps. This is if you had comparables for your industry that you could load in. You could see how you compare. In a true startup, in a relatively new business, that's going to be fairly hard to do, and we're not going to do anything with this in our exercise. Next is the revenue calculations. Just like we talked about when you build an income statement, the first thing you start with is your revenue. So hopefully you've already read the idea behind the background information. This is a company that has a new way to use solar panels to cut the electrical usage of a home, but it does it by decreasing the amount of solar heating that occurs on the house itself, which has a much shorter payback period than does the more conventional just electrical generation from solar. And so now what you see is they built a revenue plan where they talk about how many units they're going to sell. This particular, every spreadsheet has its pros and cons. One con for this particular spreadsheet is that you have to enter both annual numbers and month-by-month numbers if you want it to work properly. So what I've actually done is built these side tables or side data fields where I load in my sales for the month. And again, you'll see that this tracks with the sales estimates on the background information that you've got. And then I had it compute what our revenue was for that month simply by taking the price times the sales. So this is one of the advantages of this spreadsheet. It's very flexible. If you don't like the way it's doing something, you can almost always come over here to the side, do your own calculations, and have it copy into this table. When you change numbers, however, you've got to change them in the month-by-month sales and then also up in the annual sales. You note here I just made a nice little sum function so that I could sum these numbers and simply see what I need to copy up. So here I copy up, I'm going to sell 1,000 my first year at $1,500, the next year 1,950 at 3,000, then 2,400 at 3,000. And then this computes your revenue for the year, and then it also shows it on a month-by-month basis. It's always a good thing to check that these two match. Notice it's colored yellow, which says you don't enter it, the spreadsheet's actually calculating it. And that's all there is for the revenue tab. Notice it has flexibility for you to put in multiple product lines here. You could do the same thing here. You could have multiple product lines out here to the side, all feeding into this number. So really, it's a very flexible spreadsheet. The next tab is the cost of revenue tab, and this is relatively, when it says cost of revenue, this is what we would call more of the cost of goods sold. So in this case, if you go into the cost of revenue section on the background information, you can see the first year we're going to assume it costs us $1,700 to get the product. All the manufacturing is outsourced. $1,500 in the second year, and then again with the experience curve and more volume, the price we think we're forecasting will drop to $1,400. So now I load in my annual costs, or I'm sorry, my annual sales, and that will compute my annual direct costs. So this is the cost of goods sold. Notice you can load in other things here as well. And later in the tab, as things get factored in, if we have, for example, people that are directly in the construction, it would enter this here. I intentionally made this case very simple where we subcontract out most of the work, so all those costs for the most part get captured here in just our material costs, because what we pay for quote unquote materials is a relatively complete production process. Onto the operating expenses tab, again, a lot of flexibility here. So again, referencing down to the operating expenses in the Word document I gave you. Total media presence, I actually entitled that, so you can add lines in here if you want. You can call it different things. I just said we're going to spend $100,000 each year for all of our media expenses. Down here in research and development, I've got testing. This is $100,000 to finalize the design for manufacturing. And then you have down here sales expenses, general and administrative. You can see here 120,000, 180, and 240. This is to rent our office space, insurance, utilities, other things we're going to have to outsource. So again, that's for our business where it's a very largely an outsourced business. This does an excellent job of capturing the rest of our expenses. Obviously, I've had to calculate all these numbers. So walking in with these numbers into the spreadsheet is key. Again, as you can scroll down, you can see a lot of what happens here is computed in other things. Personnel tab. We go into the personnel tab, and we have 4 entrepreneurs, and we're each going to make a salary. 3 of us are going to make $45,000 a year. The person who had the idea and has done the most work, we're going to call the CEO, and they're going to make $50,000 a year. No pay raises. Notice in here that this spreadsheet has an assumption about the benefits. I could make that 0 if we said, nope, it's straight cash, no benefits. I just left those numbers to reflect the spreadsheet assumptions. If we were to go more into detailing our personnel, if we had a more complicated business, I can go in here and you can see I can build in a lot of other salaries. I can also go in and pay people by the hour, although it's going to ask for an average wage. And I can do it for service people. So all kinds of options on this tab. Again, I've intentionally kept this very straightforward. Extra stands for extraordinary income and expense. And here's one of the tricks of this tab. Notice I have extraordinary income up here. We don't have any. Extraordinary expense down here. We're going to pay $144,000 total in our first year. That's going to be $12,000 a month on average to pay our lawyers to complete all of our contracts, and also to complete our, excuse me, I put myself to sleep, complete all of our patenting expenses. So $144,000. Down here, however, I have to load in the minus on the month by month if I load in just pluses, because down here it's extraordinary income and expense. So I have to tell it which it is. Is it an income or an expense? This is a gotcha for this particular spreadsheet. Easy to make a mistake there. Taxes, you don't need to make a change on this. I just assumed a composite of our state and federal taxes would be 25%. It's just an assumption that will get us in the ballpark when we look at our cash flow. Property and equipment, again, because everything is outsourced, didn't fiddle with this. To the extent that we bought computers and the like, it would work out depreciation. I just chose not to go there. Depreciation is important from a tax standpoint, and accountants will want to talk about it. I got to tell you, from a standpoint of managing cash in a startup, it really is kind of irrelevant. The next tab is the working capital tab, and this has to do with the cash conversion cycle the textbook talks about. So here I get to make some assumptions as to what my receivables are, my inventory, and my payables. Notice this here, I've got a 5% accounts receivable, which says that on average I lag 18 days between when I bill and when I get paid. So I expect to get paid relatively quickly. I don't assume that I'm carrying any inventory. I don't assume I'm carrying any assets. And I don't assume that I have any accounts payable. In other words, I have to pay the bill as soon as I receive the bill. This is something you can get in and play with quite a bit. And it will make a big difference in your cash flow, not surprisingly. Again, I've just tried to keep it simple. The next tab is the funding tab. Right now, this is very clean because I'm not trying to figure out funding yet. I'm just trying to see where I am. And so, but I want to talk about this table now because as you work the exercise, you're going to see that you are going to need this. So for beginning cash, what you're going to want to do in the exercises is you're going to have to raise money, and you're going to insert that in your beginning cash. And then you're going to do that by selling shares. So you can show your shares sold in here. In this particular assignment, you really don't have to show the shares in here, but you can, and why not? Because it's going to tell you exactly what's going on, how many shares of common there are, how many shares of preferred stock there are. Usually there's not going to be any debt in this deal. There are going to be some scenarios where you're going to pay dividends. Notice I've got a $50,000 dividend hanging out here in year 5. It's not really going to matter for this, but I'm actually going to clean it out. And when you get the spreadsheets, that should be 0. So you're going to want to double check that to make sure that it is. Believe it or not, we have just completed a full income statement, balance sheet, and cash flow statement, because the spreadsheet and its magic is doing everything. It's obviously too simple to say, well, wow, it just took us 12 minutes and 47 seconds on the camera, on the screen, to complete a full set of pro formas, because there was a lot of work that went into coming up with sales estimates, price estimates, or cost of goods sold estimates, salaries and the like. But you can see that once you have your assumptions worked out, spreadsheets make it very easy to do your work. So I'm going to stop the tape now, and on the next one, we're going to talk about how do I interpret what I've got here.